Let me start this video by wishing you a very happy new year. And I do hope that 2024 was indeed a good year for you, given that the Nifty 500, Midcap and Smallcap indices delivered gains of 18%, 26% and 28% respectively. Of course, market volatility also spiked towards the end of the year. So as 2024 draws to a close, the obvious question is what will happen in 2025? Will it be as good as 2024? Will it be better or will it be rather worse? Honestly, no one can answer that question with certainty, and neither can I. But we can surely look at some indicators to have an idea of what 2025 may look like. Hello and welcome to ET Money's YouTube channel. In this video, we will try to answer 4 crucial questions for 2025. First, where are the markets headed in 2025? Number 2, what stocks should you keep on your radar? Number 3, will gold continue to shine in 2025? And number 4, will the RBI cut interest rates in 2025? Now there are a lot of important information in this video, but to get the most out of this video, watch it till the end. This video belongs to our market trends playlist. To watch more videos like this one, you can explore it. The link is in the description. Okay, let's begin with the first question. While the Nifty 500 is still up some 18% since the start of the year until December 18, 2024, it's still down some 6% from its one-year high. Now, a lot of reasons are responsible for this correction, including lukewarm results from Indian companies, FII and FPI outflows, slowing GDP growth, geopolitical tensions and so on. Now, most of these factors haven't gone away yet and they will be around in 2025 as well. But as investors, we can do little about them. In any case, such factors are always present in one form or another. But one thing which is quantifiable and which impacts markets movements is valuations. So let's check where the markets presently are in terms of valuations. Let's check the price to earnings or PE valuations of Nifty 100, the Nifty Midcap 150, the Nifty Smallcap 250 and the broader Nifty 500 indices versus their median since April 1, 2021 when the NSE changed the methodology for the calculation of the PE of Nifty indices. The Nifty 100, which consists of large caps, is still at a discount of 1% to its median PE. Mid caps and small caps are rather overheated, with the premium to the median being as high as 60% and 29% respectively. The broader Nifty 500 index is at a premium of 9%. So overall, the markets are still expensively valued except for the large cap segment, which is reasonably priced. So there may be muted returns in the mid and small cap segments or even a sharp correction in 2025. Large caps are the space where you may want to focus on. Fortunately, active large cap funds, which have been finding it difficult to beat the index, have done well in the past 2 years. Their margin of outperformance has also widened. Now, as against 37% funds that outperformed the Nifty 100 TRI in 2020, 87% funds were able to do so in 2024. The margin of outperformance has expanded from 3.2 to 4.1 percentage points. Next, let's see what stocks you should keep on your radar. Okay, when it comes to this question, there is no dearth of material online. A basic Google search is enough to throw up many expert ideas. But a good starting point is company results. Companies that perform well often have positive tailwinds that can take them ahead in the foreseeable future. So, we check the 6-month results of the Nifty 500 group of stocks between March and September 2024 to find out the outliers. Now, on your screen are 43 companies whose 6-month revenues and profits grew by at least 20% year on year. Their operating margins also expanded by at least 200 basis points year on year. Now, the largest names in the list include Zomato, Divi's Labs, ABB, Macrotech Developers, and Mazagon Dock Shipbuilders. You can download this list from the link in the description and use it to select stocks for 2025 after doing adequate research. But do note that these stocks are not a recommendation and this list should act only as the starting point of your research. Similarly, shortlisting sectors and stocks based on their good recent quarter results can also be a starting point. We recently did a video on the Q2 quarter result updates. Based on the latest quarterly results, sectors that stood out were capital goods, consumer durables, and telecom. These sectors have witnessed double-digit revenues and profit growth, and their median operating margins have expanded too. Now, for more information on the winning and losing stocks and sectors of Q2, you can watch the full video. I've included its link in the description. Now, one thing which needs special attention and which tops investment narratives in 2024 is artificial intelligence or AI. The AI wave lifted many US-based tech stocks and the tech-heavy Nasdaq 100 index. Though there are apprehensions if the AI wave has run its course, AI continues to remain a hot favorite in 2025. Now, in an earlier video, we discussed 3 ways you can profit from the AI boom. I've included the video link in the description, so do watch it after this one. Now, for more themes that can dominate the investment narrative, not just in 2025, but for the next 5 years, you can watch our video on the stocks for the next 5 years. The link is in the description. Now, this brings us to the next question. Will gold continue to do well in 2025? But before I start with that, a request. If you're finding this video useful and would you like to watch more such videos, do subscribe to our channel and don't forget to press the bell icon so you never miss a video from us. Now, as of December 18, 2024, gold has a year-to-date returns of about 20%. This is ahead of the Nifty 500's 18%. Now, whether gold can continue its momentum will depend on its key drivers. Now, in an earlier video, we discussed 4 drivers of gold prices: supply and demand, inflation and interest rates, US dollar rates, and geopolitical factors. Let's analyze the state of these 4 factors to get an idea about gold's trajectory in 2025. First is demand and supply. Now, the latest quarterly data by the World Gold Council shows that gold demand continues to remain elevated. It did dip a bit in the second calendar quarter, but sharply jumped back in the third calendar quarter. Notable is the recent rise in gold demand for investment purposes. From about 204 tons in the first calendar quarter, it has increased to 364 tons in the third calendar quarter. Now, the supply is ahead of demand, but just about sufficient to meet it. As against the demand of about 1100 tons in calendar Q3, the supply stands at about 1300 tons. The second factor is inflation and interest rates. Now, gold gains as inflation rises as it is hedged against inflation. But as interest rates are raised to tame this inflation, gold tends to lose its appeal as investors tend to switch to fixed income and vice versa. Now, in 2024, many central banks cut interest rates, including the US Fed and European Central Bank. This possibly helped gold prices. However, the outlook for rate cuts by the US Fed in 2025 remains bleak. The Fed has recently forecast just 2 rate cuts in 2025 in place of previously projected 4. This also sent the markets into a tailspin lately. In India, the RBI has kept rates unchanged and food inflation has proved to be a major irritant. So on this front, it appears that interest rates won't be slashed steeply. This could keep gold prices in check. The third factor is the movement of US dollar. Gold prices have an inverse relation with the US dollar movement. Now, that's because when the US dollar rises, it becomes expensive to buy gold in the international market, and that depresses the demand. The US dollar index has been on the up move on the back of strong growth in the US economy and the Fed's guidance of fewer than expected rate cuts. So this goes against gold. The last factor is geopolitical crisis. Now, gold gains when there is uncertainty on the geopolitical fronts and as distrust in the economic system increases. Now, the year 2024 saw a series of war in Middle East and Russia continued its aggressive stance against Ukraine. These factors aided gold prices. Now, as we enter 2025, both these wars are still on, though the markets have adjusted to them. So their continuation may have limited impact on gold prices. But addition of any new theaters in existing wars or start of a new wars can again spark gold prices. On the other hand, peace deals and restraint can deflate them. So all in all, while gold continues to be in demand, the interest rate scenario and the US dollar movement aren't conducive to its up move. Geopolitical factors remain uncertain as always and can swing in either direction. Now, amid this, gold can continue to be a tactical bet. To know more about how to approach gold as an investment option, you can watch the video I mentioned a little while ago. The link is in the description. Finally, let's talk about whether the RBI will cut interest rates in 2024. But why should you worry about interest rates? Well, low interest rates are beneficial for businesses as they encourage borrowing and expansion and also improve margins and profitability. So low interest rates are positive for the market. A fall in interest rates also improves returns from debt funds. It eases your loan burden too. Now, India's interest rates or the repo rate has been steady at 6.5% since February 2023. In spite of many economies starting with rate cut cycle, India is yet to join the club. Now, the reason for this is a rise in inflation as measured by the Consumer Price Index or CPI. In October 2024, the CPI had shot up to 6.21%. In the latest November figures, it cooled down to 5.48%. Still, inflation figures over the last 1 year have mostly stayed higher than the RBI's target of 4%, and this persistently high inflation is discouraging the RBI from cutting interest rates. However, a sagging GDP growth is also a concern. The GDP growth rate in Q2 slipped to 5.4%, falling for the fourth consecutive time in a row and reverting to the levels of the third calendar quarter of 2022. Now, the antidote to a slowing economy is a cut in interest rates, which the RBI can't resort to given the sticky inflation. This dilemma has resulted in the RBI maintaining the status quo over the last many policy meetings. Adding to this dilemma is an appreciating dollar against the rupee, which can inflate the country's import bill, thus increasing inflation. But fortunately, crude oil prices are trending downwards. This helps as crude oil is one of the major contributors to India's import bill. Now, given all the conflicting economic factors, experts are divided as to when the RBI will start cutting interest rates. All in all, while the rate cut is long due, as of now, it's not certain when will it happen. But most likely, it's a matter of when, not if. Hopefully, 2025 will bring some good news for investors. Now, what should be your debt strategy amid these interest rate movements? That would depend upon the role of debt in your portfolio. If you're using debt just for asset allocation and parking short-term corpus, you need not worry about reallocating your debt portfolio. You can stay invested in plain liquid or ultra short duration or short duration or similar debt funds that have shorter duration bonds. But if you look at your debt exposure for tactical gains too, shifting to medium or long duration debt funds can add to your returns in 2025. So, these were the 4 prominent trends for 2025. Do let us know what you think about them and feel free to add in the comments any other trends you find interesting. I hope you liked this video, and if you did, please don't forget to share it with your friends and family. I'll be back soon with another insightful video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.